Breaking news from Washington is putting both Wall Street and the global cryptocurrency market on high alert. Within the next 10 days, the United States Senate is expected to make a historic decision on the Cryptocurrency Market Structure Bill, a piece of legislation that analysts believe could fundamentally reshape how crypto exists, operates, and is regulated in the world's largest economy. This is no longer a distant policy debate or a theoretical discussion. The countdown has begun, and every passing hour now carries the potential to impact trillions of dollars in market value. This bill is far more than a new set of rules. It is designed to address the core issue that has weighed heavily on the crypto market for years: regulatory uncertainty. For a long time, crypto projects, exchanges, and investors have been forced to operate in a grey zone where the line between compliance and violation is unclear, and where a single action by regulators can trigger massive market shockwaves. The legislation now heading toward a Senate decision aims to clearly define the roles of key regulators, such as the SEC and the CFTC, establish what qualifies as a digital security, what constitutes a digital commodity, and which digital assets can legally trade within the US financial system. Analysts argue that if this bill is passed, it would represent the strongest signal yet that the United States is prepared to bring cryptocurrency fully into the light, rather than continuing to govern the sector through fragmented enforcement actions and regulatory ambiguity. A clear legal framework would significantly reduce institutional risk, opening the door for banks, investment funds, insurance companies, and major financial institutions to participate more deeply in the crypto market. And when institutional capital truly enters, the scale and momentum of the digital asset market could move into an entirely new phase. However, the other side of the equation is equally tense. If the bill is delayed, heavily amended, or ultimately rejected, disappointment could spread rapidly across the market. A sector already highly sensitive to policy developments would likely face sharp volatility as investors are forced to reassess legal and regulatory risk. In such a scenario, prolonged uncertainty could discourage large capital inflows, placing serious pressure on expectations for a sustained and stable growth cycle. What makes the next 10 days especially critical is the market's collective state of anticipation. Every comment from senators, every signal from relevant committees has the potential to become a catalyst for major price movements across Bitcoin and the broader altcoin market. Investors understand that this is not merely a political event, but a structural turning point that may determine whether cryptocurrency continues to be viewed as a high-risk fringe sector or officially evolves into a recognized component of modern finance. At the same time, the pressure is not only on the market, but also on US lawmakers themselves. This decision will send a clear message to the rest of the world: whether the United States intends to lead the digital asset era through transparent and forward-looking regulation, or allow other regions to move ahead in the race for financial innovation. History has shown that when the rules of the game are finally defined, markets tend to react violently, whether the outcome is positive or negative. Time is moving quickly. The next 10 days are shaping up to be a moment of peak tension, where expectation, anxiety, and ambition converge. Fasten your seatbelts, because the cryptocurrency market is entering a period of heightened volatility, and the decision from the United States Senate may be remembered as a defining moment in the long-term evolution of digital assets worldwide.